I'm such a big Ethereum proponent because I think it's the only blockchain that can actually be the global regulatory frameworks. It's always up. It's not owned by anyone. It's decentralized. Like it's pretty important to have a neutral playing ground for all of the world's tokenized assets, because the second it's not a neutral playing ground, you start finding pressure points.
Vivek Raman is the CEO of Etherealize. Etherealize is building the rails to move Wall Street onto Ethereum. It is creating tools for institutions to bring stocks, bonds, and real-world assets fully on-chain with privacy, compliance, and scale at its core. Why is that important for today's financial infrastructure to be able to bring equities in the existing financial markets on-chain? And then what is wrong with the existing infrastructure today?
Can use Ethereum to transmit value from place to place. So that's pretty powerful. People have been trying to digitize the financial system for a long time. I think a big part of it, especially in the US, is the financial system's really good. Like T+3 to T+2, everything still kind of works. So you need a really, really big phase shift, and you need a lot of momentum for people to actually say, let's scrap all our existing back office, let's scrap all our existing infrastructure, and let's upgrade all of it.
Today's guest is Vivek Raman, the CEO of Etherealize. This is our second Talking Tokenization episode, so you're going to have to bear with me, but we'll have fun. Vivek, welcome on the show.
Thank you for having me.
Thank you for being here. To start off, I know you were an ex-Wall Street high-yield credit trader. You spent years at Morgan Stanley, UBS, Deutsche Bank, and now you're running Etherealize. So what was the move from Wall Street's existing rails to kind of Ethereum? And can you kind of tell us about your journey to where you are today? Like, why'd you leave the banks?
Yeah, absolutely. I mean, to be honest, it's a high bar to leave the banks, because life on Wall Street's awesome. It really is. Like, life on Wall Street's awesome. The people are amazing. I would say the network is one of the greatest things ever. It's the most motivating place to work. You learn a lot of discipline. You wake up at 5 a.m. every day. You trade all day. You go meet clients, and it was an amazing 10 years. Before Wall Street, like, I was a technologist. I just got pulled into this whole credit ecosystem because I love the trading. I love the pace of Wall Street. But over the 10 years, again, I built a really, really good network, went to a bunch of different banks. I don't know, built up a good franchise as a trader. But there was really very little technological development. So after 10 years, when I saw that nothing had really changed in terms of tech upgrades or operational upgrades or settlement upgrades, like, all that happened was the bond market went from settling in 3 days to 2 days. I was like,
well, that's huge for them, right?
Yeah, but it's pretty small. At the end, like, everything should be digitized. Nothing went to the 21st century. So I had a crossroads. It was either spend the next decade doing kind of the same thing, or go find a different, more like higher convexity tech path. I was actually pretty anti-crypto on Wall Street, because that was the Kool-Aid on Wall Street. People thought it was very, back then it was blockchain, not Bitcoin. It was very just like the tokens aren't real. There was no regulatory framework. So obviously I was influenced by that, by really, really influential people. So I didn't really discover Ethereum or blockchain until I finally unplugged from Wall Street. And in 2020, I got a fresh look at this thing called Ethereum, and I serendipitously met some people at the EF, and they told me about it. And I was like, wait a second, this is actually a platform where we could digitize all the old school products I used to trade and settle them faster. And I just saw the immediate product market fit for Wall Street. After that, I was hooked. Like, after that, I was like, this is the next mission that I need to work on, is merging Wall Street operations and processes and trading with this new technology.
You probably have a really good view or kind of perspective on tokenization then, right? Because you came from a traditional background and now you're like, these things need to be upgraded. But how do you kind of define tokenization in like simple terms? And we'll go into more technical parts.
It's amazing how high level we have to start all this, because like it's
necessary.
It's part of the education process. So tokenization is just taking a physical asset and representing as much of it as possible digitally. So being able to represent it digitally means that value can transfer. A lot of the books and records can be built into this token. I almost view a token as like an asset with a built-in Excel sheet with all the model, the financials built into it. That seemed very, that resonates with Wall Street, because they know, and we live in Excel models, and everything's complex and different, from a mortgage to a commodity, everything. So if all that can be built into a digital representation, that seems like a really, really good upgrade. That's only step one, though. Step two is, if you want tokenized assets to actually be able to trade freely and be distributed broadly and packaged together, you need public blockchains. So we've seen tokenization this isn't like a new concept. We've seen tokenization for 10 years, but on private blockchains, on closed systems, and that doesn't really do much. The whole thing unlocks when you have tokenized assets on global, public, decentralized blockchains. Then the magic actually happens with network effects.
Mm-hmm. So Etherealize enables tokenization, settlements of Ethereum settlement on Ethereum and institutional grade privacy. Why is that important for today's financial infrastructure to be able to bring equities in the existing financial markets on chain? And then I think a lot of people know this, but like, what is wrong with the existing infrastructure today? You talked about the T+2, T+1. How do you guys think you could fix all that?
The first part is, I'm pretty pragmatic. I come from Wall Street. I know the Wall Street view, and I also know that what's going to resonate and what's not going to resonate. Like, Ethereum's not going to replace the financial system. It's not going to like dethrone all the banks. It's not a productive way to think about it. I see Ethereum as a back-end infrastructure that the whole financial system can settle on and use it kind of like people with information use the internet to transmit information. People with value, which are assets, can use Ethereum to transmit value from place to place. So that's pretty powerful. Again, people have been trying to digitize the financial system for a long time. I think a big part of it, especially in the US, is the financial system's really good. Like, T+3 to T+2, everything still kind of works. Mm-hmm. So you need a really, really big phase shift, and you need a lot of momentum for people to actually say, let's scrap all our existing back office, let's scrap all our existing infrastructure, and let's upgrade all of it. There's a lot of inertia. I mean, it's really difficult to do. I left Wall Street in 2019, 2020. Mm-hmm. We started Etherealize last year. So there's 4 years in the middle that I was doing the same pitch. And that's why I refined it. That's why I know how tokenization resonates. I know how public blockchains resonate. But for 4 years, everyone was like, thank you for coming in, but no thanks.
Mm-hmm. Is it shifting now then?
It's completely shifted. I mean, so that I got so many rejections and got so many just no's and just got dismissed from so many different, again, I kept my network, across Wall Street, but they were like, yeah, this is great, but it's, everything's good as is and we don't want to change anything. Last year, I mean, like the shot heard around the world was when Larry Fink said every stock and bonds can be tokenized. And you're like, okay, well, he has a lot of clout. So that means that something's probably coming. And then like the ETH ETFs got approved and they're like, wait, Ethereum's actually like it's going to have a regulatory framework around it. Mm-hmm. And obviously after the election and the US became really, really pro crypto, then financial institutions, which are actually pretty risk averse as it should be because they handle value, not just information. They finally said, okay, there is enough of a tailwind of regulatory shift, of the administration, of industry push. All of it finally lined up after 4 years of nothing lining up. It was a hard 4 years, but everything finally lined up. So we said, okay, now tokenization on Ethereum can blossom and other blockchains have sort of business development and marketing arms and centralized foundations that go around and sort of pitch everything. Ethereum doesn't because it's actually decentralized distributed. So we said, okay, let's stand up Etherealize as an independent entity to go actually bring Wall Street assets, Wall Street players, institutional users onto Ethereum, because that's a product market fit that I saw. Obviously, Ethereum is way, way bigger than that, and one day we'll get to the world computer and all the really cool things we do, but a really good first step is to tokenize the world's assets.
Right. So 4 years later, how would you kind of describe the institutional adoption of both Ethereum, but then tokenization as a whole today?
It's just starting. That's the thing. Like, we're barely scratching the surface. Like, we have $166 billion of stablecoins on Ethereum. I mean, that's the starting point. All of Ethereum's catalysts, ironically, as I started, I mean, with the Genius Act, with the stablecoin bill passing, with the change in administration, a lot of other L1s, a lot of other ecosystems, took regulatory stances, sort of went against, didn't have a regulatory framework and still pushed forward. That's fine. They had a bit of a quote unquote head start in terms of taking risk, but Ethereum's incredibly neutral. It's apolitical. It's bipartisan. So like only when Ethereum is de-risked enough can we see institutional adoption start. So with the stablecoin bill, now stablecoins are a thing. You can't press the undo button on stablecoins. So what follows right after stablecoins are the rest of the world's tokenized assets. And that's where the real upside is. So stablecoins are the perfect first step, but like now we should take every other asset and then represent at least part of it, if not all of it, digitally on a blockchain, and then see all the magic that happens.
Yeah, the question I'm thinking while you're talking is like, do you want everything 100% tokenized on Ethereum, or you think it's a certain percentage of the existing financial assets that will be? Like long term, not today.
Everything. I mean, that's the thing. Yeah, because that's how this works, and specifically on Ethereum encompasses a lot of things. It's not just layer one; it's also all the different layer twos, which allow institutions to have their own customized blockchains, have their own permission environments, have their own revenue mechanisms. Everyone wants a customized environment where they can have their customer base. Layer twos are kind of perfect for that because you don't have to reinvent the wheel. You don't have to build a new blockchain, and you can still plug into Ethereum's network effects. But within Ethereum layer one and all the different layer twos, this thing only really works at scale if we take the world's assets and can tokenize all of them. So, you should be able to take a mortgage and then take a stock and then package them together if you want. You should be able to pay for things in using stocks or bonds instead of, and it just auto converts to stablecoins on the back end. Like all this becomes possible when assets are programmatic and digital. Mm-hmm. So I don't see why it's nice. Let's go for all of it. And it's pretty positive sum because there's a lot of assets out there. So everyone can have a piece of it. Everyone can do very little, but it's a big opportunity.
Yeah. Why do you think the traditional institutions, or I guess even these rails, haven't done this already? Like combining, stocks with my mortgage or different types of like combo deals, I would think of it as. Is it just because like if it's not broken, don't fix it? We don't need to change this, or was it something else when you were on Wall Street? What did you notice?
Part of it's if it's not broken, don't fix it. Part of it was a lot of this happened before the 2008 crisis. 2008 crisis was the most financial innovation that you could possibly do, like mortgages squared, etc. Yeah, but that's because it was done on closed systems and it was not transparent, and you had all these systems that don't talk to each other because they're closed. Blockchains solve all of that. Blockchains allow everything to be auditable, like be traceable. You can't have a lot of the issues that caused the 2008 crisis if you have everything on a blockchain. So it actually makes the system safer and more resilient. But again, it wasn't too broken, and there wasn't a regulatory approach. I can't stress how important the regulatory part is. It sounds like an easy answer, but like you're not going to get mass institutional adoption if there isn't a big regulatory tailwind. No one wants to play with.
Right. There's no point. It has to be compliant and within like the frameworks that they operate in.
Which we've finally gotten we're starting to get for the first time in blockchain's history. We have the most friendly SEC that's pro-innovation. They're not going to allow everything, but they're pro-innovation. They want to see responsible innovation with public blockchains. You have exec branch and legislative branch that's quite pro-blockchain. Even I had the opportunity to testify in front of Congress on the Clarity Act, and when I was sitting there looking at both sides wanted the same thing. It was actually very heartwarming. Like both sides, there are small nuances, but like at the end of the day, everyone wants clarity for digital assets and wants a framework. And so, I don't know, it's I always say it's the most positive sum technology. It's pretty easy to pitch because it only makes life better. It doesn't really cut anyone out. And that's the only that's the only thing I want to work on. I don't want to work on zero sum tech.
Yeah. And that's part of it too, is like you have to educate people and show them that is kind of what it is, because so many headlines and like previous nightmare stories have made it look like it's otherwise.
Yeah, and that's
it's a bummer.
But that's on the industry. Yeah, that part of there weren't regulatory frameworks, so like the people that were willing to take risks aren't the people you want stewarding the industry. So that's part of it. And I like to think I have good integrity. I didn't start Etherealize 4 years ago. I didn't want to do anything offshore. I was like, if I'm going to build something, I want it to be in the U.S. I want it to be in New York. I want to be with the counterparties that I used to work with. And you need a lot of tailwinds. So yeah, we had a few waves of early tries, and they didn't work. The 2022 thing kind of ended in a disaster. Yeah. Now we have to do actual responsible innovation, that's one of the reasons I'm such a big Ethereum proponent, because I think it's the only blockchain that can actually be globally fit the global regulatory frameworks. It's always up. It's not owned by anyone. It's decentralized. Like it's pretty important to have a neutral playing ground for all of the world's tokenized assets, because the second it's not a neutral playing ground, start finding pressure points.
Yeah, for sure. Etherealize raised $40 million recently. What will that money be used towards for like product and infrastructure of Ethereum for financial institutions, or on Ethereum? I keep saying for Ethereum. On Ethereum for financial institutions. Like, what are you guys going to build?
Yeah, so this is the next evolution. I mean, when we started Etherealize a year ago, there was a big educational lift to do. There's a big policy push to do. And I think for too long, blockchains and crypto tools have been solutions looking for problems, and no one had problems or displayed problems and ever. So we just built a bunch of infrastructures or bridges to nowhere. So we spent a year talking to everybody, which is it was important. It was important to validate that, okay, there are tools that need to be built to usher the next wave of adoption. We also attracted like the best engineering talent you could possibly ask for. I mean, Danny Ryan joined us, Zach Obrant joined us, and because we represent a lot of Ethereum and I think steward the ecosystem fairly well. Like, we're getting more and more talent on the ZK side that they all want to come like build responsible things. So now it's time to go build those responsible things. So we had to first educate about Ethereum. We had to educate about tokenization at the highest level. Like, why do we need a blockchain? What is tokenization? The first questions you ask. What are layer twos? That's actually really important too, because we do strongly believe that the layer 2 model is how you're going to get corporate adoption, where they get everything they want. They get their control, they get their revenue, they get their profit margin. They also get their blockchain strategy. And then we also had to talk about ETH, the asset, a lot, because it's wild that this is the case, but the technology is also, people's perception of the technology is linked to the asset price. It shouldn't be, but it's crypto, so it is what it is. So we did a lot of educating around ETH, the asset, and now ETH is, I think, being elevated. It's elevated to store value. I mean, and you have all these treasury companies that are now going to take the baton and talk about ETH, the asset. So now that we have tailwinds, there were a lot of headwinds early on. Now we have tailwinds on all fronts: regulatory, from ETH asset price, from the willingness for institutions to adopt. We have a list of all the different pain points people have and said, okay, let's go build tools to solve them, and let's have a war chest of capital so we can go do that really, really quickly, because I can't take for granted that the window of opportunity will be open forever. People's attention spans are short, and if we don't get meaningful, responsible adoption kind of right now, we might miss a window. So we're building two things. One is infrastructure to onboard and bring the next wave of tokenized assets onto Ethereum. And these are all the assets others aren't focused on. Securitize has done a wonderful job leading the way on tokenization of funds, of individual assets. There's a lot of assets out there that no one's touched yet, in the fixed income space, in the real estate space. We see new opportunities all the time. So we said, okay, there's infinite TAM for this, so let's come in and help bring more assets onto Ethereum L1, L2. But the second thing too is a lot of these assets have to be traded privately, compliantly, but privately. And that infrastructure just does not exist yet for regulatory reasons. It was hard to do real privacy tech with institutions early on. Zero knowledge proofs are ready, public blockchains are ready, L2s are ready. So now we're sort of approaching privacy from first principles, saying, how should tokenized assets be traded where you can still have everyone KYC'd, still have all the regulatory checkboxes, conceal what we need to conceal, reveal what we need to reveal, but make sure it's all still above board. That's a really, really cool design space, and it's hard, but it's necessary if we're gonna have public blockchains take over. So, or not take over, but be the backbone of the financial system. So yeah, we're building some pretty in-depth privacy tools to enable that.
Yeah, integrate, not replace.
Integrate, not replace is exactly right.
I'm obviously aware of how long these engineering timelines take, so I'm going to be conscious of that when I asked you this question, but you said the time is now and we have to kind of take advantage of the moment. So for these tools and the infrastructure that you guys are building, how soon do you plan on getting this into the hands of financial institutions?
Really fast.
What does really fast mean?
No, I mean, this is always a business versus tech thing. So business over promises and tech takes time, especially compliant tech. And also there's the regulatory component. You have to get everything checked by compliance. You have to get I think less than a year. I think that's the window that we have. Midterms are next year. Everyone's announcing their crypto plans now. We do have tailwinds for next year. It just, then political winds could shift. So less than a year.
Okay. And then once this is all live and up and running, let's say in less than a year, how do you kind of see that enabling more growth opportunities for this like multi-trillion-dollar market being traded and managed out there today? What is it going to change?
I think it's going to, stablecoins were the first product market fit. Money market funds have done really, really well. Tokenized treasuries, money market funds. Once we get quote unquote everything else, you're already seeing like a lot of people working on tokenized stocks. That's great. That's going to be a really, really cool set of iterations to see. But we're going to focus on the rest of the world's assets. Once you have them, then innovation will take care of itself. The thing is, banks know how to make money. They know how to structure products. Like this is their DNA. So once they see a playing ground, an open playing ground with every single asset possible digitally represented, they'll just start creating products. You can start creating. The next wave of banking analysts, instead of living in Excel, they'll live in Solidity and put together different tokenization models and sky's the limit there. So I think we're going to see a real innovative positive sum wave happen once you have critical massive assets. Right now, it's just limited what you can do if you have stablecoins and money market funds. It kind of just means payments. Once you have other assets on, then you can start doing real trading, real structured products, and even take a mortgage on chain or take a car loan on chain or something once you have digitized title on chain. So like there's the design space is really, really, really wide. And that's what the next 10 years could be. Just we have to push the ball forward enough in the next year that it won't just all go away.
This episode of Talking Tokens is brought to you by Fireblocks, a stablecoin infrastructure of choice for top global businesses from Visa and WorldPay to Bridge and Revolut. With over 100 billion in monthly stablecoin volume, Fireblocks powers stablecoin strategies at scale with infrastructure that enables PSPs, fintechs, remitters, and banks to issue, move, hold, and manage stablecoins. And it's all done securely at scale and with built-in compliance. With Fireblocks, you get complete control to build your own stablecoin orchestration layer, create payment accounts, manage liquidity, and access on and off ramps into over 60 currencies, making it easier to build, scale, and expand your stablecoin business globally. Learn more at fireblocks.com. How are these Wall Street incumbents and institutional players leaning into RWAs and tokenizations today, or just even on-chain assets? Like, where is the most demand that you're seeing?
Stablecoins and payments. It's the lowest hanging fruit, but
it's a good entrance.
It's a great entrance. Tokenized stocks are starting to. You saw the Nasdaq say they're going to allow for tokenized stock trading or regular sort of stock trading. So that's the starting point. But it's tokenization of everything really. Like it is the cleanest and easiest product market fit to point to that's still positive sum and just makes the system better. So I think the focus will continue to be on tokenization for a while until it just becomes digitally native. Like assets should just be digitally native when they're issued. Like there shouldn't be this books and records, fax machines, and different files.
Are you using fax machines?
They are.
Oh my God.
Yeah, a lot of the financial systems still using fax machines.
CDs, floppy disks? No, I think we moved on from that.
Maybe.
It's like USBs now.
Yeah, but it's graduated USBs.
Where do you think is the most untapped potential in this category then? Obviously, I think we're in such early stages, like first inning, whatever. But where is kind of like you see this going? Is it through tokenizing treasuries, cash instruments, cash flows and debt, or like bringing assets on chain in another capacity that hasn't been discussed at all? Or is it all the above? Because they're really not touched.
It's kind of all the above because everyone wants different things. So you have to parallelize. That's part of the reason why we're sprinting on so many different parallel asset classes, because it's whatever the market wants. Where the worst thing we can do is say, here's what we think, here's a solution. Everyone put their problems into the solution bucket. No, we need to go see what people want to bring on chain. So it's across the board. The commodities markets, things like carbon credits, things like, and all across fixed income, and then asset level too. Because once you have, let's take a car title and put that on chain and start doing car loans again, so you can also have better tracking. So unifying these frameworks is important, and we're working a lot on that. But it's going to be across the board. If you ask 10 financial institutions what they want to tokenize, you'll get 10 different answers. So we have to kind of
there's no general consensus. I guess
no, because stablecoins are done. Tokenized deposits are kind of, there's a path to it. Tokenized money market funds it's all going to be table stakes at some point. So it's whatever makes everyone's lives easier. Like like a mortgage bank's going to want mortgages tokenized. A commodity trading house is going to want commodities tokenized. So it's
they all got their own little niches and categories for sure. Etherealize put out a report recently with insights from the securitized team, and it stated essentially, I think the title was like Wall Street needs a blockchain, and that blockchain is Ethereum. And it also stated that the financial system is at this inflection point. And earlier we talked about how there's this shift happening. So can you kind of explain to me what you see as the inflection point today? And then we could go from there.
I think that every single headwind is now a tailwind. So that's the inflection point. And again, it took 4 years of a lot of it looked like good timing to start Etherealize, but it was because it was good timing. But it was also because of 4 years of being really bad timing and trying the same thing and just like poking and saying, hey, well, you guys. So the regulatory landscape's a tailwind. The across the board, SEC and Congress and judicial system across the board, everyone's pro innovation. Institutional demand and willingness to actually change their tech stack. It's really hard to do, especially when it works pretty well. But America's the backbone of the capital markets, right? So, we've seen a lot of things where a lot of crypto adoption's already happened overseas in markets where there's a clear problem. So, stablecoins and everything are a clear 100x better solution. Blockchains aren't 100x better for Wall Street yet. I think they will be. But so that's why it's just hard to get people off of the existing system. Now that there's enough of an industry wide desire to do that. So that's another big tailwind. And the technology stack being ready. There's a lot of Ethereum layer 2 precedent. Ethereum is it's been 10 years. It's proven itself. It's never gone down. It's never been centrally controlled. It's not owned by anyone. Token distribution is global. Most validators. It's the closest you get to the internet for financial assets. So people are just ready. They're ready to say, okay, let's adopt this in mass at institutional grade scale.
Yeah. The report stated that there's over $2.9 billion in tokenized treasuries. And, then we have BlackRock's Biddle Fund that has grown 860% from the day before it launched to today.
Yeah, it's cool.
Yeah. So, yeah, it is kind of safe to say we are at this like inflection point. But what will it take to hit that escape velocity moment? Like, is there even bigger tipping point that you see on the horizon once we get all this regulatory approval? You guys build those tools that you said you'll build within a year. What's kind of the really like snapping point? And it's snapping in a good way, not snapping.
Yeah. I want to see organic desire to, internal to all these asset managers and institutions that actually want to do this themselves with their own teams internally. It doesn't exist yet. There aren't enough blockchain engineers. There aren't enough people that that can productionize things yet. It has to come from within the industry. Right now, it's going to take just running around and helping everyone in any way possible, solving any pain point, solving any problem. It's a lot of work. It's grueling. I'd run around New York City all day is my job. Basically, it's pretty funny. But I don't know, as Wall Street institutional back offices upgrade their requirements from knowing Excel to knowing Solidity, for example, and they think natively, hey, we're going to issue a new mortgage. It's going to be done natively on chain, or issue a new stock and be done natively on chain. Until that happens from the inside, that's when it'll become like very self-fulfilling. Until then, we just have to go drive adoption and drive demand and keep evangelizing. So, Etherealize started off as marketing and business development, and now we're evolving to product and infrastructure. But I want to highlight, like, the marketing and business development can't ever stop. Like, that's table stakes until everyone understands blockchains as well as they understand the internet. Because now no one questions building a website on the internet or using the internet. It just is.
It's just what we do.
That has to happen for blockchains too.
We're all internet companies.
Yeah, exactly.
So one day we'll all be
blockchain companies, and then that's when it just becomes neat. And then everything's better. Financial systems better. Assets are digital. Access is better. Distribution's better. I think it's going to create a lot of jobs and to create a lot of GDP. We're in this era where everyone says that AI and everything is going to take away jobs. I actually think this will create way more because there's so much more innovation potential, and you can create a micro bank based on a blockchain that still tracks deposits and is fully there's no fractional reserve. It's fully funded. Like, people can create smaller versions of very profitable companies. L2s are one of the most profitable business models out there. It doesn't take a lot of people to build one. So I just think we're going to see a huge new wave of jobs and innovation because of this. And
Yeah. So when you're running around the city having these conversations, what percentage of the people still think you're crazy?
Not a lot.
That's good.
So it's it was 4 years of people thinking they're like, all right, cool.
Like, I can't believe he left the bank job for this. Yeah.
Exactly. I got a lot of that, and it was for 4 years. I was like, why did I leave the bank job? I could have had like Wall Street pays well, and it's a really good network too.
Yeah.
Like, it has a lot of really smart people.
Yeah.
But now the smart people are pretty risk averse, as they should be, because it's a really good job. So why would you take excess risk? Now they're all open to blockchain. So
do you find that obviously crypto assets are highly volatile and it's a very risk on industry, but when you kind of talk about Ethereum and tokenizing assets, do you present it as less of that?
Yeah, absolutely. I present the infrastructure side, because the infrastructure side it should work really well if ETH is 25,000 or if ETH is 4,000. The technology is still the same stack to tokenize assets on. But token prices come up, and token prices are important because it's the security of the network. For any proof of stake network, it's security of the network. It shows more capital coming in this space. So we've created this technology where there is an asset tied to it, and it is important for the asset to do well. So that's why part of my job will always be talking about how ETH's a really good store of value. Bitcoin sort of got a pass. Bitcoin is now viewed as a store of value, even though there's no utility. Like, you can't. I still get questions. Why don't we just tokenize this on Bitcoin? I'm like, all right, well.
It'll be very slow.
Well, you can't. There's no smart contracts. Like, there's so there's a bit of an educational thing, but I think it's positive some. I think ETH price is doing well. It gives a lot of capital and tailwinds to technology. Technology doing well gives a lot of confidence to ETH. It's all reflexive.
Right.
I think we're seeing very positive reflexivity finally, after a year of decoupling.
Yeah. The report also talked about how tokenization makes static assets more dynamic and programmable. And I'm sure that's something that comes up in conversations too, right? So how does this kind of change the speed of issuance, democratization of assets, and just like opening up a new door to a user base of investors that were previously not able to walk through that door?
Yeah, a lot of the most sophisticated products that Wall Street constructed, even like pre-financial crisis, like CDOs and collateralized mortgage obligations and everything, without tokenization, it's pretty annoying and cumbersome to do that. With tokenization, it's putting 2 or 3 or 10 or 100 tokens together programmatically, which becomes trivial. All the accounting that has to happen for different interest payments and different payment streams and like that becomes very manual the old way. With tokenized assets, is just all built in to the actual asset, so it's categorically better. People want access to those products. Retail has access to a fraction of what institutional players have access to, and that's not the best for institutions either, because if retail has access to different kinds of products, there's going to be more retail demand, which will create more capital and more demand for capital, and then it's just better for velocity of capital. It's better for the economy. So blockchains allow for global distribution. They allow for retail distribution. It's as easy to send an asset to a retail wallet than it is to an institutional wallet. Obviously, with all the KYC bells and whistles, we need to have KYC solved. We need to have everyone that's table stakes, and I think that's doable and solvable. But being able to distribute complex financial products and give people want access to SpaceX stock. They want access to the yield from some commercial mortgage building. It wasn't doable before easily. Now with tokenization, it becomes a lot easier. And I think that's a net benefit. Like, more access to more people for more types of products is, and I always say positive sum, but it's one of those pretty positive sum things that I think makes the system better.
Yeah. In theory, any asset can have its value represented on any on-chain token, on any blockchain. So that kind of opens up what's possible over the next couple of years, right? Than what we previously had.
Yeah, I think that's absolutely true. I think now we can see good experimentation of digitization of all assets. People are doing a lot with tokenized stocks, which is awesome. They're not starting to tokenize things like Robinhood. The demo is SpaceX stock or OpenAI stock. That's pretty cool. You'll see a lot of different innovation happen, and then there'll be a standardized way that checks all the regulatory boxes. That's sort of the industry standard. But you'll see a lot of different permutations too. Like some people criticize the SPV tokenization model, saying that, oh well, you own OpenAI stock, but you don't actually own it. But some people don't care. Like no one, some people don't want the governance rights. They just want the price upside and say, I want to play OpenAI stock for a little bit or play a space asset. So point is, I don't think one is right or wrong. I think the innovation to experiment with all those different models and then work with regulators and see which one fits the best, and then offering a broad variety of, just way more choices is going to lead to a better financial system.
Mm-hmm. Yeah, I mean, but with the idea of buying like OpenAI or companies that are private that you actually really can't buy unless you're like an investor, how does that kind of like shift the way we invest in things that were previously uninvestable?
I think it's going to be a huge regulatory issue. So first,
are you buying these things?
No, we have to. Not. I mean, I'm not personally. We have to solve.
I think they look cool and they sound cool in theory, but then I'm like, OpenAI might sue them, right?
In the short term, maybe.
Yeah.
In the medium term, this is actually, if you have an option to distribute capital to a broader group of people that might want capital at better terms or better valuations or whatever, that's going to open up capital formation. Like there is with all the regulatory bells and whistles, as long as everything is by the book, because it can be and it should be. But why would a company not want to access capital from other places? I mean, the first wave of this was ICOs. Like ICOs raised capital that would never be able to be raised in traditional capital markets. It was done without a regulatory framework, so it had a boom, it had a bust. But now, if private companies can access capital more broadly, more cheaply, in a compliant manner globally, why would a company not want that? So yeah, I mean, someone huge like OpenAI already has huge access to capital, so they don't really. But yeah, the smaller tier companies, the wave of innovation that happens at the startup phase or the early stage, if they have different levers to pull for capital, why would that not be a good thing?
Yeah. We've been talking a lot throughout this conversation about Wall Street. And I also want to get your global perspective, right? Because Wall Street, a lot of these major markets in like New York, London, Hong Kong, etc., are very important. But what about the other like emerging economies and markets? How do you think about building financial tools for them?
Incredibly important. I think everything scales because it's software. I mean, it's like saying that if you build Venmo, you can use it subject to regulation. You can use that in the US, you can use that in any other emerging market. Software scales really well. So that's why all this is positive sum for all markets, because all markets can access what's on the internet. So all markets can access what's on Ethereum. And so those assets, as long as there's KYC and people know where the capital is going, they'll have access to a huge suite of tools, and it'll offer more savings rates. It'll offer, if you're in a high inflation country, you can not just stay in US dollars, but you can also stay in money market funds. You can stay in treasuries. You can even go to US stocks and things that people wouldn't be able to access normally. It just gives easier, more frictionless access. So I think it's actually hugely beneficial for the global financial system. I just start with the Wall Street side because I know it best. And if you say you're going to do can't bite off more than you can chew. So it's a really good starting point. But the idea is everyone wants to democratize access in the end. It's good for the banks too. It's more customers.
Yeah. And what about for Ethereum? How do you kind of think about propelling and scaling the Ethereum ecosystem while keeping in mind, like the needs and wants from the financial rails out there today?
I think that we have messed up a few previous cycles of irresponsible innovation, of too much centralization, of too many points of failure. I think Ethereum is the only option that's institutional grade, that's ready for global scale, that can span across multiple regulatory regimes, not just the US, and that institutions view as a network that no one owns, so they can deploy assets on. So it's really, really important to me and to Etherealize, that the majority of the world's assets as they get tokenized are on this Ethereum ecosystem, because the worst case would be if we have 100 different L1 blockchains that can't talk to each other, that have different kinds of assets, and then you need huge trust assumptions to have them interact and trade with each other. And then you've actually, my North Star is we have to make the financial system better, not worse. And so 100 different L1s are going to fragment things and have different trust assumptions. If everything's within the Ethereum economy, L1 and L2s, and it's the most future-proofed financial system. So it is very important. It's important for us to be on the most decentralized, secure layer that has never had downtime, that's been around for 10 years. Like these are assets we're talking about, not information. So you can't have an outage. You can't have just like a bunch of people in Discord say, oh, let's restart all the validators, and then we're back up and running. Now you need a global network. So
obviously there's a lot of momentum behind the industry right now, and then there's a lot of work ahead. Is there anything that you're afraid of that can kind of impede all of this?
Yeah, not going fast enough. I mean, the window's open. It's been 4 years for me and then 10 years for the industry of waiting for like a window of innovation. We need as much responsible innovation as quickly as possible. The thing, Danny Ryan said this when he came on board as co-founder. He said, the pendulum will always shift back and forth. We need to make sure that we create as much responsible innovation as possible. So when the pendulum comes back, it can't go all the way back to erasing blockchains from the system. So yeah, we need real innovation that people are going to look at and say, we want to work on this secularly, not cyclically. I think, yeah, if we don't do enough good things during a quote unquote cycle, crypto risks not being secular and just fading away. And no, we have a lot of urgency for that. So
yeah, it needs to be concrete, in place. What's the North Star for you? In one sentence.
More tokenized assets, more L2s, all on Ethereum.
All right. Lastly, Vivek, can you leave us with a conversation that you had, an interesting one you had recently, whether it was with an institutional or financial player that our listeners would like to hear? You don't have to say their names if you don't want to, but you can.
Yeah. Multiple, actually. I mean, this is us getting data points. Multiple have said being able to use a blockchain if there aren't options for privacy is just a complete non-starter. So that's part of our other North Star. I mean, I gave you a very high level North Star of tokenized assets and L2s, but yeah, privacy is table stakes. It's not even just like an optional thing. Blockchains will not scale to even close to what they need to if we don't have good privacy technology. And yeah, we're
thanks. Don't want everyone seeing what they're
doing. No one does. I mean, you don't want your paychecks into you.
My credit card statements.
Yeah. There's it seems obvious, but it's pretty mission critical, and that's why we're dedicating a huge portion of our company towards building correct, compliant privacy tools.
Amazing. Well, thank you so much for coming on the show today.
Thank you for having me. It was fun.